live and record. Open up the camera. All right, here we are, live on YouTube. We had to use a different layout here today, guys. I do apologize for those of you that are noticing a little bit of difference on YouTube. We're doing something differently, and we're going to do a morning market update. We're going to get started and jump right into it. And you're going to see my screen, and that's how it's going to have to be today. We'll get it up and running for tomorrow. I hope you guys are having a great day. Welcome to morning market update for Thursday, May the 23rd of 2019. First and foremost, I want to wish a happy birthday to my sister. It's her birthday today. My older sister, happy birthday. I love you. You're probably never going to see this unless you started trading, which, you know, I've been saying this for years. It's the way to go. All right, morning market fun fact for today. Before you could trade stocks online or see which stocks were moving in real time on your mobile phone, on the internet, I mean, the whole online trading world really started in 2002 and 3 and really grew in the mid 2000s. That's when we really were able to do this online trading stuff. Before, the cable or the UK pound was known as the wire because you had to get a physical wire installed. But before we went digital with this trading industry, bank or brokers relied on quotes that came in through a little machine with a tape on it. If you think like a receipt, when you pay for something, how it prints it, the ticker tape would be the same thing. It would print out quotes, it would make a ticking sound, and it would just be a roll that would come out with the latest quotes. And that was known as the ticker tape. And that's how information for stock prices was translated through, and the paper would print and make a ticking sound. So that's a pretty cool morning market fun fact. And we've come a really long way from the ticker tape to real-time quotes on your monitor. So to be a successful trader, you also have to appreciate the history and the background from where we evolved. All right, very important. In today's morning market update, we're going to talk about Theresa May. There was news last night that she's preparing her resignation. As early as today, she's going to announce that she is going to be resigning, all right, after one of her key cabinet ministers resigned herself on Wednesday. She just quit the post and the job, dealing a blow to her leadership. All right, investors of the pound obviously were worried and sold it down 4% overnight to 1.2612, not 4%, 0.4%. All right, on the back of increasing uncertainty about what's going to happen with this new Brexit deal. How are they going to exit? What is that going to look like? All right. Theresa May did say that she's gonna stay on as prime minister until there's a two-stage process for a new election to find her successor. All right, so the markets are here. They're a little bit nervous and wondering who will negotiate with the EU. What does this mean for the deadline that's been set? And how much further could this thing get pushed out? And the question now is, will Europe extend the end of May deadline that they had for the Brexit negotiations? And if they do not, then it becomes a hard Brexit scenario. If the new leadership comes into play, will there be a second referendum? There's more questions being opened up than are answered in a place where there's been questions for years. All right, this Brexit process has gone less than stellar, worse than anyone could have imagined. And now we're kind of back to square one. All right, back to ground zero, to the drawing board. So that's something that we're keeping a close eye out on out of the UK. All right. Overnight, also, Huawei ban spread globally. The executive order that was signed by Donald Trump on the 15th of May is now being enforced by a lot of countries and continents outside of just America. All right, have a look at this. Toshiba officially suspended shipments of electronics to Huawei. Japan and South Korea are also joining this ban. They're U.S. allies, so they're supporting the executive order. Japan's ARM, which is a company that makes chips, is going to stop shipping all active contracts, any support entitlements they're providing to Huawei, and any pending engagement. So they're kind of putting their relationship on pause. All right, UK is also joining the United States blockade on Huawei. And I have one question for you guys. Did I buy, so about 3 or 4 months ago, I bought the Huawei Mate Pro X as a laptop. This is an amazing computer, very portable, very mobile, ultrabook. I mean, it's slammed with specs, one of the best notebooks for 2018. In fact, it was voted the best notebook for 2018. The only thing I don't like about it is the fact you got to press the F. It's between F5 and F6. You got to press it. It's like an F key almost, and the camera slides up. gives you like a creepy view like this. Imagine me doing a morning market update like this. Hey guys, kind of creepy. It's the only thing I didn't like about the laptop. Everything else, stellar device. So I'm wondering, did I buy it at the worst time or the best time? And that's the question I asked myself. You guys maybe let me know in the comments. What do you think? How will this affect current owners of their technology? Because we know the support's being cut off, so maybe the products won't be supported in the future. However, the ones you have now do work, and they work really good. All right, Wednesday's key earnings yesterday. Lowe's is down 11% on slimming gross margins. They're losing gross margin. Shares got hit. Target, on the other hand, though, is up 7.8% as their digital sales skyrocketed 42%. So we're noticing a trend here where retail is doing really bad recently. The retail apocalypse, as they call it. Retail stocks are getting hammered. XRTs and ETF that you could be riding the downside by getting some put options. I think short retail, long online retail has been a good trade for the last couple months and will continue to be a good trade. And it's interesting to see Target is up big because of their online sales and their digital work, rather their in-store retail. All right. And I think that's a trend a lot of these companies will begin shifting into. Right. I mean, we do a lot of our shopping online. I'd like to ask you guys this morning market update in the comment section to tell me what percentage of your shopping is done online. For me, in the last, I'd say year, probably about 96%. All right. I only really buy clothes, morning market. I only really buy clothes in person occasionally just to kind of get the sizing right. And then I'll get that product. And once I know the size of the brand, I'll do it online mostly. All right. Today's markets in Asia, Japan's down 0.6%, Hong Kong's down 1.6, China down 1.4, India down 0.8%. Sea of red across the board in the Asian session. In Europe, the same thing. Everything's down over 1%. London's down 1.5%, Paris is down 1.7%, and Frankfurt is down 1.8%. In the United States, same deal. Red across the board. Dow's down 1%, S&P down 1.1%, and NASDAQ down 1.5%. Sea of red across the board, and I think today we're going to see more selling. This breakdown of the trade talks didn't really cause as much downside as a lot of people forecasted, and I think the reason being is there's some retail money that's jumped in to get long. They see this as a buying opportunity. However, institutional money hasn't been buying into this rally at all. In fact, they've been using it as an opportunity to exit. Creating these retail buyers and the retail demand is a good opportunity for a big institution to let go of some big supply at this time, and that's what they've been doing. They've been exiting equities all of 2019. They haven't been on board this rally to the same extent they typically would be. It's the worst. It's kind of the most hated rally so far in 2019. So that's sort of what we're seeing. And I think because there's a lot of money stuck to the long side, I think today we flush out some of that downside liquidity. All those stop losses to the downside are going to get run today. I'm seeing a bearish day starting by selling rallies, and then we're going to pick it up from there and see what happens towards the late morning and early afternoon, if there's going to be any kind of reversal or if we'll continue to get hit. One of the things that's really influencing the downside on the market is oil prices dropping so much. They're down huge from yesterday. Yesterday, we were trading in the oil room in the trading room, we're trading the oil inventory number, and it came as a big build across the board. And we immediately got on the short side, huge opportunity. A lot of the traders in the room yesterday made really good money. It was just a great day, and oil continues to probe new lows. This morning at 8:28, crude oil, the WTI futures contract, broke below $60 a barrel for the first time since March. All right, so there's a lot of selling pressure. Yeah, we broke below 60. Yep, we went down to the 78. Let's see if we've tested it again. And yeah, now we're even lower than that. 78 was overnight lows. We opened the pit session at 59.88. Now we're pressing the 45s. Liquidity down at 58.95. So we could have another 40, 50 cent drop before we find any real support. And even then, it's temporary support. There's an exodus of oil. Be careful trying to buy this thing. The sell-off's not ready yet. It's not done. All right. Gold is currently up quite a bit, back to 1283.50 off the 72s. We've seen about a $10 rally on gold. Bitcoin down 3%, back inside of the 7,000 range. At Trade Pro Academy, we did a really good video saying 8,000 is going to be a resistance, and it hit that resistance. It was time to take some profit. It's going to consolidate here a little bit more before we make any kind of move. This morning at 8:30, we had initial jobless claims. They came in at 211,000 versus 215,000 expected. Less is better for the market here. Less people filed for unemployment, and the 4-week average was lower at 220,000 versus 225. I don't think that news alone is enough to hold the market up and to prop it up, right? I think it's like, oh, well, look, here's a nice jobless claims report. Cool, let's keep selling. And that's what the market's been doing. We have a lot of news today. 10 a.m. new home sales, 10:30 natural gas inventory, 11 a.m. Kansas City Fed manufacturing survey, 1 p.m. Fed's Bostic speaks, along with Fed's Barking and Fed's Molly. They're all speaking at 1 p.m. and Kaplan. So we have 1, 2, 3, 4 speakers starting at 1 p.m. So this afternoon will be Fed driven. Here's why this is important. Yesterday, we looked at the latest FOMC meeting minutes. All right. And there was a very small reaction in equities. I thought that based on the meeting minutes, equities should go down, and we were short in the elite trading room. And then we stopped out of that trade with a -1 tick. So we took a loss, but a small loss, because it just didn't look ready to go down. Gold wasn't reacting. The dollar was still, equities weren't really ready to make a move, and we just called it a day. Instead, we focused on working on some trading psychology stuff with the elite team instead. Great discussion all afternoon, basically. But now we're going down, and I'll tell you why. In the Federal Reserve meeting at the end of April, all right? Remember, when they had this meeting, the trade talks were going great. Everyone was high-fiving each other. A deal was imminent. Everyone was waiting for the final announcement. A lot's changed since then. However, the meeting suggested that the Federal Reserve is not considering cutting rates at all, like zero intention to cut rates. And the market's been expecting or pricing in a little bit of a rate cut. So the fact they came in and said inflation is transitory, that's their favorite word, right? You could use that with your spouse as well. We made a joke yesterday. You know, if you're doing something she doesn't like or he doesn't like, just say, it's transitory, honey. I'm working on it. That's what the Federal Reserve excuse was for inflation. The inflation's lower than they want. Therefore, they can't raise rates anymore, but they're saying this low inflation is transitory. They think it's going to last short term and it's going to start to climb back out. I'm of the opinion that it's not. I think we're going to have these low rates for the next 10, 15, 20 years. Bold statement to make. And all my properties are being renewed right now at variable rates, not expecting a hike in interest rates. All right. I just had a renewal actually the other day, went with the variable rate. Thanks for your advice, Marky. Did you say to go fixed or variable? Oh, yeah, you know what? I mean, the rates are low enough in Canada, especially if Canada raises rates, there's a lot of people that are going to default. And to be honest with you, I could afford a bit of a rate hike on a variable rate. I have the cash flow sitting around on a monthly basis and in total. And so anyways, that's a whole other discussion we could have later on. That's what we got today. Look to sell rallies early on. Wait for the afternoon if you want to start to build a bullish bias. I think early on we're going to hit the markets here a little bit hard on the sell side. If we start to break some of the resistances, and obviously we're not going to hit the market, and you can start buying. Be patient the first 10 minutes. This is a very exciting day that's opening up. You're going to get movement, right? That's for sure. The goal is to be patient long enough so you get the right trade and not get yourself stuck in just any trade. You're not here to take any trade. You're here to take good trades. That's what trade pros do. Have a great day. Manage your risk. Trade like a trade pro. We'll see you tomorrow. Enjoy your session. I'm going to turn around and open up the trading room with their team right now. Take care. Goodbye. All right, trade pros in the room. Let me shut down the YouTube broadcast. Got to figure out how to do it. Oh, stop live stream. Take care, YouTube. And I'm going to start talking about S&P 500, some key resistance levels where I want to work and qualify short, and above which level I'll stop looking for the short and transfer to the long side. Then I'll pass it off to Mark, talk about the Dow, and then Boxy for oil. Let's get into it.